Hello and good morning, everyone. Charles Heuring here with IAMS Wealth Management, and we'll go ahead and get the webinar started. It looks like we still have some people trickling in, but for the sake of time, we'll get things rolling here. As I mentioned, my name is Charles Heuring. I'm the Chief Operations Officer here at IAMS Wealth Management, and today I'm going to talk really at a high level a little bit about who we are and what we can do to help you as a listener grow your business, especially in a time like this that is certainly unique. For those of you who may not be aware, IAMS Wealth Management is simply the securities side of insurance agency marketing services. So we are a different entity, but we're within the same family, serving the same group of producers as they go out there for the ultimate goal of making sure the end client is getting the best service and best timeliness as possible. So that's a little bit about what we do. So today I'm going to talk very high level about kind of what we are as a firm, the different tools we offer advisors to have at their disposal to ultimately provide better service for clients, a more diverse group of services, and ultimately add revenue to their pocket and value to their business entity. So without further ado, I'll go ahead and get started here. The only two things I'll mention, one is that our phone number is at the bottom of every slide. So if anything you hear today piques your interest, and like I said, this is going to be kind of high level, so I'm going to breeze through a lot of different topics briefly. If there's anything specifically you'd like to talk with me one-on-one on, I'm happy to do that, and that's our number there below. Secondly, if any questions pop up throughout the webinar that you might like me to address for the group, feel free to type those in. I'll get to a few at the end, assuming they're kind of general questions that would be good for the audience to hear. If they're more one-off scenarios or one-off questions, that'll be something I'll follow up with you personally on later on after the webinar is finished. So we'll go ahead and get things started here today. So for this presentation, we are an SEC registered firm, so all of this is used for financial professional use only. I just want to mention that because there are some graphics in here that might be good for use of the client. More than happy to help get something in your hand that is designed to be client facing. But what we're going to talk about today is just for use with financial professionals only. So going back to the point I made of kind of the IAMS umbrella, who we are as IAMS, Insurance Agency Marketing, and IAMS Wealth Management. Well, we're really two different entities under the same umbrella. Insurance Agency Marketing Services, who I'm assuming everyone listening is familiar with, has been around for 30 some years, really has a reputation built on service, full service, that 3-ring guarantee, and helping you from the beginning to the end of making sure all your annuity and life cases get completed. Well, at IAMS Wealth Management, we started 4 years ago. We were built with that same value structure. So we have that same 3-ring guarantee. We want to be that full service proposal system, helping you from the beginning to the end of onboarding your accounts and even beyond as you have to manage those accounts on an ongoing basis. So I like to make this point because it really is the same values between the two different entities, and that's what's allowed us to have the initial success as a firm that we have had so far in our 4 years of being open for business. As we get into a little bit more of the who and the what about IAMS Wealth Management, as I mentioned at the kickoff, IAMS Wealth Management is the security side of insurance agency marketing services. So what that means is it allows you to do a broader range of services for your clients. You can help clients with their investment accounts, 401ks. You can even manage 401k plans. So those are all things that you can do with IAMS Wealth Management, but that does come with an additional license requirement. So if you just have an insurance license or a life license, you would need to acquire a securities license. The easiest way is just the Series 65 exam. And we can talk through that on a more specific basis. But I know there's a diverse audience listening. Many of you probably already have a securities license. I think I see a few names of advisors that are actually already with IAMS Wealth Management too, just getting a refresher on certain things. But at the same time, I know there's some people out there probably listening that don't have a securities license or used to have one and then maybe gave it up. And we service advisors of all types. So if you're someone that needs to get information on starting maybe the process of getting a securities license, reach out to us. We have a steady program in place, and we typically have 1 to 2 advisors a month trying to take that exam and join on. So you'd be joining the ranks there, and we'd be happy to tell you all about kind of what that process entails. But jumping forward to the time when a test gets passed, I just want to highlight the difference between what we are, a registered investment advisory firm and a broker-dealer, just because this is a common question that we find within our kind of network of contacts, is that a lot of people know what both are, but they might not necessarily know what the difference is, or that there even is a difference. So at a high level, a broker-dealer is more of a transactional securities license. So you're facilitating, securities purchases and sales for your clients, and you're typically earning commissions then based off of those transactions. Now that's very broadly speaking, but that tends to be what a broker-dealer ramification is. Whereas on the flip side, for what we do as an RIA, our primary function is investment advice, and our firm and our advisors generate their revenue from an ongoing flat advisory fee. So one misconception I do want to clear up is I think a lot of people think you need to be with a broker-dealer to do certain things that you can't do with an RIA, and that's not entirely true. The main difference is just how you charge for it. So if you have a client that you're trying to manage a stock account for, you can do that with an RIA. You just don't earn a commission, you earn an ongoing fee. Same thing goes for perhaps a variable annuity. A lot of people say, those are broker-dealer products, and in a general sense they are, but there are fee-based variable annuities that you can write through an RIA and do that simply with a 65 license. And the reason I like to say that is because one gripe that we frequently hear with individuals who are maybe in the broker-dealer world is that they're kind of tired of maybe FINRA regulations and kind of what that kind of does with their oversight and kind of how they want their reps to be monitored. On the flip side, for what we do, we're monitored by the Securities and Exchange Commission, the SEC. And the nice thing is the SEC monitors us as a firm, and then it's our responsibility as a firm to monitor our advisors. So the SEC is never going to come audit you as an advisor with IAMS Wealth Management. They're going to come to our home office here. So it's kind of nice that you have that kind of set up in that way. And then ultimately, as an RIA, you're a fiduciary as well. So that's a marketing leverage point that you can use to your clients, because you are obligated to act in their best interests, something you're likely already doing to begin with, but it's nice to at least have that badge, have that feather in your hat, just to be able to say that, because of the advancements I've taken to professionally advance myself, I've acquired the securities license, I've aligned with a firm like IAMS Wealth Management, I am now a fiduciary. And that's a nice distinction that you can make, because not all financial professionals are held to that same standard. So that's a brief glimpse at the difference between an RIA and a broker-dealer. I just like to highlight that because that typically is one of the situations where there might be the most misconceptions. But as IAMS Wealth Management, we are an RIA, so everything you're seeing on that left side of the column, that's what we do. Now moving forward, just kind of an introduction to our firm. As I mentioned, we started almost 4 years ago now at this point, not quite 4 years. We're up to 40 advisors across the country, 80 million of assets under advisement through our team of advisors, and that's consistently growing, even in a year like 2020, where we saw the fastest market correction in the history of the stock market. We've still been treading along, and I think that in itself kind of proves there's always a need for market assets. You're going to come across every client who might obviously have their bucket of assets that need to be safe, secure, and more reliable, but there's always a piece, whether it's half of the portfolio, 10% of the portfolio, that really should be left liquid and maybe have that market correlation. That's speaking broadly, but it's nice for our advisors. They're able to have both of those conversations, and it's allowed them to thrive in a year like 2020 that's been as uncertain as it has been. So the importance of an advisor, though, and this is something I stress to our team on a regular basis, even on our advisor calls that we have, is the old saying, the future ain't what it used to be. As the years go by, the average life expectancy continues to rise. Now it's hovering around 80 years and growing. And it's easy to think of, the very basic ways that this has ramifications in our society, and especially in the financial industry. But just highlighting a few, what does this mean for retirement planning? Retirement's lasting longer. Rules that might have been easy to follow 20 years ago regarding retirement planning won't necessarily be the status quo 20 years from now. Different growth rates you're needing, different life expectancies you're needing. There's going to be different ramifications to follow. The same goes for estate planning. As you pass assets on from generation to generation, what's it going to look like when all of a sudden 3, 4, 5 generations are alive at one time? That's going to become even more key as you're trying to pass assets on from generation to generation as you go for that estate planning. More so even tax planning. as life expectancy is getting longer, people are going to want to really find ways to efficiently plan their assets from a tax efficiency standpoint. And that all dovetails in with retirement planning and estate planning. And then same goes for college planning too. How is even something as simple as college planning going to change as we get further and further along with higher life expectancies? It's not outside the realm of possibility to think that what someone learns from 18 to 22 suddenly will be obsolete then when they're 60, 65. And if they're going to live to be 100 someday, there might be some sort of secondary college wave that comes in just for further learning. And for those of you that have been in the business for 20, 30, 40 years, you can probably already see how much has evolved just in the time frame you've been in business. Just let yourself imagine what that's going to mean 40 years from now. So when all that really boils down to is that client needs are obviously evolving. We all know that. The industry is evolving, and you as a person in this line of business, your business does need to evolve too. So what we've done here at IAMS Wealth Management is create a very basic way for someone who might be an insurance first producer to really add a new realm of services and products and avenues to their business that allow their clients to really more efficiently capitalize on their retirement planning, on their estate planning, tax planning, and so on. So that's kind of my pitch for what we do and how we can help. But just really when it gets down to the 3 bullet points I always like to talk about when we're talking about growing your business, it really comes down to these 3 items. If someone was in an elevator with me and they wanted to know in 60 seconds quick what I would go over, I would just say these 3 bullet points very quickly. Now I'm going to elaborate them on a little bit more since we have more time than 60 seconds for this slide today. But this is really what I think any advisor who's currently with us, if you met them, this would probably be the 3 things that they say are their biggest bonuses from being with IAMS Wealth Management. And the first one being increased revenue. It's easy to conceptualize the fact that if you're doing more business with a wider range of assets you can gather, of course you're going to add increased revenue because you're going to have managed money fees on investment assets maybe you had passed up before as a product-only salesman. So that's recurring revenue you're earning actually on a monthly basis, year after year after year, that kind of comes in as a nice steady paycheck when the inevitable slumps come during your maybe commissionable sales or the time of the year you want to take a month off to be with family, or maybe a global pandemic like we've seen in 2020. Our advisors, even if they couldn't get in front of clients to close annuity sales and life sales, they're still getting monthly recurring revenue fees from their assets under management, and that can do a lot for your peace of mind as a business. But looking at that from a second standpoint, I think what a lot of people maybe overlook is just the sheer value of building a book of business, what that can do to the value of your business itself. When the time comes for you to either pass that on internally to someone or pass it on to someone externally who maybe is looking to acquire you and your book of business, having recurring revenue in there is extremely valuable, and it's going to probably increase the valuation of your business anywhere between 2 and 3 times. So I have plenty of studies that can kind of talk to that point. I'm happy to pass those along to anyone who might be intrigued. So that's my kind of pitch on number 1 there. And all these do tie together because number 2 is going to blend right into that. I mean, you're going to have strengthened client relationships. You're no longer just simply the product guy who then refers a client out to the stockbroker or a different advisor, and they're getting pieces of advice from 2 to 3 different relationships. You can now be that one loan source, and your clients view you differently as a fiduciary. So when you're their one-stop shop for all of their needs, you're their first call for everything they might need. So all that's going to do is increase your sales because you're top of mind. And 2, it's going to really limit the possibility that they might go elsewhere or look elsewhere, which leads us right into point 3, improve client retention. Since you're able to handle all of the services, they have no need to go talk to another broker or get a second opinion because you're meant to be that one solo resource who can help them with all their needs. And what we've especially seen in a year like 2020 is even if you have a client who might be in their 40s and 50s and has a good chunk of money in the market, a year like 2020 might give someone the perspective that, I thought maybe I was willing to take risks, that now that I've actually seen red numbers on my statements, maybe I'm not as risky as I thought. So either we've had advisors maybe turning portfolios a little bit more conservative, or even moving money out of portfolios to more secure products like annuities or CDs, things of that nature. And all that's doing is keeping the client within your business entity. It doesn't matter if they're a managed money client, an annuity client, or a combination of the two. It's helping you kind of farm your own business, so to speak. And all that's doing is helping you retain what you've already had and what you've already spent time and money to build. So I think all these three things kind of blend together of the value of being with a group like IAMS Wealth Management and having these enhanced capabilities. So I know I kind of breezed through that quickly, but I hope now you guys have at least some sort of idea of how being an investment advisor can not only help you add new money, but help your existing business as well. And I actually have a similar slide to talk about that later on. I think one of the biggest misconceptions we hear too from the advisory side is people say, it's too time consuming. I don't have the expertise. I don't want the liability. All frequent things that I'm sure many of you listening are actually maybe even thinking yourself right now. But what I would encourage you to do is think of IAMS Wealth Management, our advisory program, is really just another tool for you to gather more assets. It's built to allow you to focus on your existing business already and add just a single new component. We're not trying to bring an advisor in and overhaul what you're doing. We're trying just to really give you another avenue to better service your clients. So as the second bullet point down here says, our systems allow you to do this advisory service without overhauling your day-to-day life and what you're already doing. So you're not going to have to wake up every day and be a stock picker and manage accounts. You're not going to not be able to suddenly go on vacation anymore because you have to bill clients the third week of every month. We really do all the nitty-gritty for you behind the scenes and allow our advisors to really be that relationship manager on the front end, not necessarily an asset manager on the back end. That's the stuff that we try to do for you on your behalf. So as simple as I can put it, think of IAMS Wealth Management as a new marketing program to help you reach more clients and retain others. That's kind of what we try to do in a nutshell. That might be pretty close to a mission statement, I guess, if we were going to have one for advisors. So I like talking about that slide here. And now just going through a few hypothetical appointments, kind of back to what I talked about a few slides ago, of how this might be able to attribute to your current business life. Let's assume that right now you're an advisor who doesn't have a securities license. You're only dealing with product sales. There's absolutely nothing wrong with that. But these are actually 5 appointments that we saw in about a span of 10 days that our advisors went through. And they all were saying, I can't, I don't know what I would have done if I didn't have my securities license, because it's not only allowed me to grab more managed money assets, it's allowed me to help my annuity production as well. And these 5 appointments, as we go through them, hopefully will help illustrate that. So appointment number 1 that we helped an advisor with, it was about a $75,000 prospect who's an annuity candidate. If you're an insurance agent, you're writing that annuity. And if you're an advisor, you're still going to do that anyway. It's not changing what you're doing. Maybe this prospect has other investable assets on the side. Maybe they don't. In this instance, they didn't, but the advisor's life was unchanged. They still wrote the premium just like they would have otherwise. Another advisor came to us with appointment, number 2. It was actually a $1.2 million prospect. He calls, the quote unquote big fish. If he's an agent, he was told that he wouldn't have actually gotten any sort of sale because this client wanted someone who could handle all of their needs for their investable assets. So what that actually ended up for the advisor was half in annuity production and half in AUM. And subsequently, that other half that went into AUM about 2 years ago has now started to go into annuity premium as well. So just having a Series 65 allowed this advisor to capture an otherwise client he would have lost. So that's, I think, a really good way to look at it. Appointment number 3 is a good one. A $300,000 prospect, a great referral. This advisor told us that if they would have only had their agent license, they would have gotten probably half of it in annuity. But the same token, because they're able to do everything, they were able to capture everything. Now, if we're going to appointment number 4, this was actually someone who had their Series 65 for about a week, and they had a former client of 20 plus years unfortunately pass away, and their 32-year-old child inherited some money. So they said unless they had that securities license, they wouldn't have gotten that client captured, and they wouldn't have been able to transcend from client A to client B, because at 32 years old, the client wasn't attracted to an annuity, but they did like having some sort of market exposure. So this advisor was able to capture the assets under management, and really all that advisor is now doing is now servicing the client as they need. And as they age, their needs evolve, their goals evolve, all that's going to do is likely be some sort of product sale down the line. And that's a nice now lead source for the advisor as they're earning that recurring revenue over time. And then last but not least, we had an advisor who was doing some of their annual reviews with a long-time annuity client. And if they wouldn't have had a securities license, they wouldn't have realized that they could handle, a $50,000 brokerage account that they had on hand. They never asked about it. They never talked about it before. And that's probably one thing that I think our advisors benefit from most is, and I would encourage everyone listening to even think about this too. You don't know the type of assets and the type of business you're missing out on without a securities license, because if you're not licensed to talk about it, majority of people don't bring it up. But our advisors have found that now they're able to talk about everything. They're able to handle more assets. They're able to likely get in front of higher net worth individuals because they are a full service advisor. And these 5 appointments can really show you the benefit of what this can do. As you can see here, if you were just an agent, you still would have done really well over 5 appointments, getting close to $250,000 in premium. But just having that ability to talk about both sides of the fence not only quadrupled the premium almost, it did get you almost a $1 million start in your assets under management. So again, this isn't a every appointment thing, but it does help illustrate the value of having the capability to talk both sides of the client experience. So I like to always go through this slide to illustrate that. So hopefully that kind of gives you an idea of who we are as IAMS Wealth Management, the value that we can provide you as an advisor, and then the value as you as an advisor can provide your clients in your own business by having the capabilities. So with the last 20 minutes or so of this presentation, I'll go through high level some specifics about IAMS Wealth Management. So if you're intrigued enough to maybe consider joining us, now you'll get an idea of kind of the different tools and different technologies and platform you'll have at your disposal. Again, this is something that we try to do over maybe a 2-day training session for our advisors on a quarterly basis. And I'm going to try to cover it in a high level in about 20 minutes. So I don't expect to go through everything, and I don't expect anyone listening to have a full scope of what we do. But I would encourage you that if any of this intrigues you at all, definitely reach out. I'm more than happy to talk through your specific situation and how each of our tools and systems and different technologies can help you out and maybe help your business out as you look to grow at the end of 2020 and beyond. So we'll keep rolling along here. So just kind of an overview of our systems. First, we'll talk about our business systems. A lot of people wonder, if I go ahead and get a securities license, that's great and all, but how am I going to be able to sell this to my clients and prospects? Well, there's a couple different ways. We use third-party money managers that release all sorts of different materials and their various strategies and how they work in varying market conditions and whatnot. So a lot of advisors use that. Other advisors use our proposal generation software. So we actually have 2 different proposal systems, Advisor World and Riskalyze, and those of you in the industry might know both of those. But it's nice because it starts with a risk questionnaire, it gauges the client's risk tolerance, and then you can then present a portfolio designed around that risk tolerance, and then you can focus on that being the proposed allocation and not worrying if you're being too conservative or too aggressive with your proposal. It really helps you do it compliantly and pretty efficiently. And then as always, if the client deems they're a little bit more conservative than they think their risk score is, or maybe more aggressive, you can always change that, but that at least gives you the starting point and gives you a lot of good leverage points to make in that sales process. And a neat thing too is it can actually compare and contrast with an existing portfolio. And what we find time after time is that clients are typically invested much more aggressively than they maybe realize, or maybe don't realize all the underlying expenses they're already paying within their funds if they have maybe a mutual fund account perhaps. So this tool can help you really boil that down and see through the weeds on a lot of that. And I'm more than happy to get you a copy of a sample one if you're looking to see that. And then the second question we normally get is, okay, well, even if I can process the business and sell people on it, well, how am I going to maintain a completely new arm of my business? I don't want to take the time, or I don't have the time to learn a whole new system. And the nice thing is we really have one tool for your advisory business, and that's called Elements. And the nice thing about that is it actually streamlines everything into a single cohesive business management tool. So not only can you open a new account from that, you can see all your existing accounts, you can trade your current accounts, you can go in there and run reports on performance. It really, as the bullet point says here, creates 100% transparency on your advisory business being processed by yourself or our team, and it creates a traceable, compliant records. You never have to worry if you're taking enough notes, or why did I rebalance this account, or where is that paperwork? It's all in there. It's all archived and it's all in one cohesive system. So you're not having to take out that Post-it note you might have hidden by your computer that has, your 87 passwords for the various different things you probably have. It's one tool. That's your IAMS Wealth Management tool. And it's nice because you're working on the same system that myself and our team are. So it's almost like we're in the same office together. So a lot of our advisors like that. For anyone listening who is in the securities industry already, for you, the perk would be it's all through one source, and it also allows you to really efficiently open up client accounts. So if you have all the client information, you can open and pre-populate custodial paperwork in 5 to 10 minutes for a single account. And for those of you out there, that can take up to an hour if you're trying to just do it regularly by hand. But the real plus there too is that you can actually do multiple accounts through one set of paperwork. So if a client needs an individual account, an IRA, and maybe a trust account, you can do it all at once with one bundle of paperwork, and then it really streamlines everything. And then for those of you who are aware too, we do have DocuSign capabilities, and that's been extremely helpful in 2020. If clients aren't willing to meet you face to face, you can do a Zoom meeting to pitch them on the topic, send them over the paperwork electronically, and even have the accounts open the very next day in some cases. So a lot of different ways to really add to your business efficiencies. And I know I'm glossing through a lot there, but hopefully that gives you the high level bullet points of kind of our business systems. On the other hand, client-facing systems, advisors like to know what they have at their disposal. Well, first, every advisor with IAMS Wealth Management gets a website. We think that is a very important marketing tool for you, just because we talk to people and they say, well, I've never generated a lead from my website. And that's a different argument to begin with, because we can try to find ways to do that. But even so, even if you're never generating a lead from your website, in 2020, a website for you is an online storefront. It's how a prospect can actually go find more information about you, vet you in a little bit of ways, find out who you are without having to just kind of go in blindly. And there's been time and time again that we've heard of advisors that may have been with us in their past that have lost clients because of this, or even ones they've found because maybe they've talked to an advisor who doesn't have a website or an online presence, and maybe they don't trust that advisor, so that's why they're going with an IAMS Wealth Management advisor. It's really just a way to unify your brand and add that credibility, and that's something we provide all advisors with IAMS Wealth Management. And a beautiful step to that is through your website, your clients can actually log into their account portal through our reporting software, Orion, and see their activity on a daily basis. So there's a couple different ways for them to do that. They can do it through your website, through your portal, or they can always log in directly to the custodian. But what we find is that the custodian logins are typically more data-driven, which you'll obviously have certain clients that love the nitty-gritty and want to see valuations change every minute of the day. Other times you might just have clients that are looking for very basic stuff and they want to log in once a month and see it. So we can handle both. But the nice thing about the one on your website is that it is a comprehensive portfolio aggregating tool, meaning that not only can they look at their own account, but they can actually pull in outside accounts that they have logins to, and it can all aggregate through that client portal. So if they have an investment account with you, a savings account, and a checking account in a bank, that can get pulled in. Let's say they have a different account, maybe a stock account that they just want to buy and sell themselves. It's kind of their risky account, but they like being a stock picker. They can tie that in there too. And on the flip side, it actually can throw in liabilities as well. So if they want to link in a mortgage that is consistently due or a credit card payment, it's going to allow them to log in every day and see an updated view of their quote unquote household balance sheet and see their assets and liabilities and then overall net worth. And that is nice for them because it's an added service that you provide, but then you as an advisor, it gives you a better capability to make sure you're servicing them as they should be. Because we've had advisors find out that clients bring all of their financials to a meeting, and then 6 months later the advisor finds out there's an account they didn't know about, and they find out through this balance sheet. So now they're able to better service that client. So again, I know I'm kind of breezing through that, but it's a little snapshot of the client-facing systems we offer. Here's an idea of what that balance sheet would look like. So you can see here's just a sample client we did, but you can see there's a general portfolio. You can even put in stagnant assets like a home or a car, and the client can change the value of that stagnant asset maybe once a year as things evolve. So it really is nice because then you can log in and see everything, and this updates on a daily basis. So gone are the days when clients have to log into 8 different accounts to kind of get an idea of where their finances stand. It can be all through this one cohesive tool. So moving on to just kind of the general support, I'm sure there's people out there wondering, well, then this is all well and good, but what else are you going to do to support me in my business? Well, we have a full service marketing team on staff here at IAMS. And as an advisor, any work they do for you is complimentary, and it's a broad range of contents. We have turnkey materials that they can get to you in a matter of a day or two, and it's simply just slapping your logo on a couple various things, and it's going to give you that instant credibility that you can use with various client appointments. But we also have advisors that might do various seminars or want to do other one-off mailers, things like that, and they're happy to work one-on-one with various projects too. A little longer turnaround time on those, but that is a added value of being an advisor with IAMS Wealth Management. Same goes for our advisor services team. We have advisors that go into our Element system and they actually do everything themselves. They generate their own paperwork, they trade their own accounts, and that's fine and well. Eventually, that's where all advisors are going to get. But for any new advisor that are, maybe just a little gun shy or curious and they don't want to mess up, and we completely understand that. So we're happy to almost do the whole process for you. So we can help you generate your paperwork. If you send us a questionnaire and a statement in the morning, we'll get you everything you need for an appointment that afternoon. So think of our team here, whether it's our sales team, our compliance team, or our marketing creative team, as almost an extension of your staff. And especially for a lot of people listening, I know you might be a 1 or 2 person office, and that can be challenging. So think of us an extension of your team. And by being a part of IAMS Wealth Management, the IAMS Wealth Management family, I mean, you get access to us as if we're sitting there in your office with you. So I want to make sure I make that very clear. You are one of the team here if you join us as an advisor. And the last 2 things, advisors kind of ask about if they're wanting to join us. Well, how do you go about trading accounts and billing accounts? Well, we do all of that on your behalf. So if you bring a client in who's in a managed model, maybe they're 60-40 equities and fixed income, those are going to get automatically rebalanced from the managers on a regular interval, whether it's one that you choose that can rebalance monthly or quarterly or is annually if they're more strategic. No matter what, that's going to get done on your behalf, so you're not having to allot a couple days a month to go in and do your own trading. Same goes for billing. You're not having to calculate the billing, execute the billing. We do all of that on your behalf, and it's nice because you just get a monthly deposit in your bank account without having to lift a finger. So really, kind of the way we describe it is we want our advisors to be asset gatherers rather than asset managers, and you can leave a lot of the nitty-gritty to us. We want you to be the face of the client relationship on the front end. Going beyond that, we do have advisor training events. So a lot of people that join us think, well, how am I going to learn? Well, obviously this year has been a little different. It's hard to be getting small groups together, but we have been doing one-on-one training. We have a YouTube channel with webinars on all of our various technologies and all of our money managers, so you can even learn on your own time too. And then you have multiple resources. So you have our team here, and then you have all of our expansive partnerships across the spectrum with various technology providers, proposal providers, money managers. So I just want to reiterate that your relationship with IAMS Wealth Management expands well beyond our 4 walls here at our home office in Omaha. You have several different resources that you have at your disposal. And I want to really reiterate that as you are part of a massive network of IAMS Wealth Management advisors, clients, and partners as an advisor with us. So that gives you an idea of kind of the systems and operations. The last thing I'm going to briefly touch on before we wrap up here, maybe with a few questions, is just our platform. I could talk for 5 hours on this platform by itself if I was going to go in depth. But for the sake of today, I'm just going to highlight a few of our third-party managers that we use, just to give you a sense of what we have at our disposal. But before I do that, I just kind of want to talk about why we kind of developed our platform the way we did. And the truth is, people make emotional decisions. That in 2020 is probably apparent more than ever. I mean, this is a unique time, certainly to be alive with all that's going on, with the pandemic, with different social issues going on. It's easy to see the news and let fear or optimism overrule rational, sound decision making. And that's oftentimes one of the worst things you can do in investing, good or bad. So this quote here from a famous Omahan, Warren Buffett, be fearful when others are greedy and greedy when others are fearful. It's natural human nature to panic sell and panic buy and kind of get emotional because each day it feels like might be the best opportunity to time the market, or I got to get out before it plummets, or I got to get back in because it's skyrocketing. The problem with that is if you're trying to time the market, you have to be right twice. You have to know when to sell and when to get back in. And while you might be able to do that once or twice, that's not a great sound plan to develop a 10, 20, 30-year investment strategy. So that's kind of why we use our third-party managers that help our advisors and our clients avoid the pitfalls of oftentimes that emotional decision making. And what we find too is that generally speaking, investors are more loss averse rather than risk averse. And I'm betting a lot of you listening maybe even have kind of the same inclination too with your clients, or even maybe friends you socialize with at the coffee shop or the golf course, is that, you know, in investors gain money, they're always talking in percentages. You know, oh, I'm up 12% for the year, I'm up 25% for the year, what are you? Whereas on the flip side, if they're down, they're not talking in percentages typically, they're talking in dollars. So they're saying, yeah, I'm down 20 grand, my advisor, you know, put me in this different investment, I'm down 20,000. And that's because losses are very tangible. They are loss averse rather than risk averse. So we want to make sure we have a sound investment strategy that's designed to perform through various market cycles that by no guarantee are going to be profitable, but at least there's a consistent, reliable plan that gives our clients and our advisors the best chance of offering success that we can in this very turbulent, uncertain stock market that we all kind of navigate. And then lastly too, I kind of made the point, but believe it or not, advisors make emotional decisions too. We field calls from advisors who are curious for our thoughts on various market conditions or what we're reading or different partners we have from market economists. So if you're out there as an advisor and you find yourself kind of getting antsy as well, don't feel bad. It happens, but that's why we lean on the expertise of a third-party manager and not kind of independently managed advisor portfolios, because we don't want you to get in your own way. And we think the easiest way to do that is for us to outsource that portfolio management services to seasoned entities who have been doing this a while, that have a track record, that have a plan. And then at the end of the day, it's going to allow you to really focus on your clients' needs and not worry about, do I need to trade my accounts this afternoon? I got to wake up early and read the market charts and make my decisions. That's not something we expect you to do here at IAMS Wealth Management. We let our institutional managers do that. So kind of leapfrogging to what we set out to do when we built our platform is we want to do a platform that can complement insurance business. And that goes really to the point that we're not expecting you to be an asset manager. We outsource that so you can focus on what you do well, and that's meeting clients and making sure their needs are satisfied. That kind of goes right into point number two, you know, developing a platform that won't overhaul your existing business, because we don't suddenly want you to be a stock picker. Number three, you know, we want to develop a platform that's simple at its core, yet able to be built out. And we've done that. You know, if you're someone who just wants a turnkey, simple option, our most basic version of the platform is just 5 different models that span from conservative to aggressive. And we have some advisors that only use those 5. If they have a conservative client, they put them in number 1. If they have an aggressive client, they put them in number 5. And it can be as simple as that, or as complex as picking an equity manager, an income manager, an alternative manager, and then maybe a couple different buffered products. And now I know I'm getting into the weeds here, but I just want to say that just to allow anyone listening to know that it can be as simple or as complex as you want it to be. And that's kind of the beautiful thing about our platform. But at the end of the day, it's nice, kind of circling back to that last point, at least here it implements a consistent plan. So no matter what you're doing, whether you're using a strategic manager or a tactical manager, it's going to have some sort of consistency to the investment plan. And that's when we like to know that there is something going on with a consistent plan in the client portfolio. We're not having to wonder, are we trading or buying or selling too soon? As long as it's following a consistent plan, that's going to give you the best chance of delivering optimal results over a long period of time. So the first of just 3 managers I'm going to spotlight here as we wrap up is First Trust. Some of you in the industry might know First Trust, and I wouldn't be surprised if a lot of you not in the investment industry don't know First Trust, and that's by design. You know, they're not out there marketing. You're never going to see their name on a sports stadium or see a TV commercial, because they're not competing for the retail client like a lot of the other big brokerage firms are. They're one of the top 5 largest ETF managers and providers in the industry, and they only work through investment advisors. So their primary focus is helping groups like IAMS Wealth Management and our network of advisors grow their assets under management. And they do this through a lot of different ways. They have coaching programs that help you really find your identity as a full service advisor. They have a whole market research entity that actually sends out weekly market updates. So you don't have to do anything weekly except maybe read that one Monday morning Outlook report, and you'll be able to deliver consistent 3, 4, 5 bullet points to your clients on a weekly basis if anyone has questions about what's going on in the market, and you'll sound like the smartest guy in the room. And that's all courtesy of First Trust. But lastly, obviously, they do asset management as well, and they have 5 blended risk models. Those are the 5 I spoke about earlier, and they also have 9 focus models that might be more specific entities like equity, international equity, fixed income, alternatives. So if you're someone who likes to build your own portfolios, that's not a bad way to do it. Otherwise, like I said, we have a lot of advisors just using the 5 blended models that span the risk spectrum from low to high, and that's their bread and butter. And just kind of an idea here of what those look like. These kind of vary on a regular basis, but you can see on the conservative side, this is all built into that one portfolio. It's going to be about 17% equities, 60% fixed income, 8% alternatives, and about 15% cash. Now transpose that with the aggressive growth model, that's going to be predominantly in equities with a little exposure to fixed income and alternatives. And the nice thing is that your client's getting this diversification really from one model, and you're providing that for them. So it's getting automatically managed to stay within this parameter. It's staying not only within this parameter, but the underlying parameters are getting balanced between varying ETFs that the manager is deciding that might deliver the best chance of optimal performance. And again, this is happening all behind the scenes. The client's seeing this activity on their statement, and you're not having to make sure that's happening or calling us to make sure we're trading it. It's all happening systematically behind the scenes. And it's going to do that until you change the investment allocation. So if someone's aggressive growth and they eventually determine their needs change, they can go down to maybe balanced growth, which is more of a 50-50 model. There's no penalty to do that. There's no time frame to do that. There's no additional cost to do that. It's just nice because it's all in the same portfolio. You could change models every month if you wanted to. Now, I wouldn't suggest it, but I'm just saying that to really drill the point down that you have a lot of flexibility within these portfolios to make sure your clients' needs are getting met. So that's a little idea on First Trust. As I mentioned, they were a little bit more of an ETF manager. So I like to highlight then Brookmont, which is more of an equity-focused manager. So they're not going to be using ETFs. They're actually going to be using large cap stocks. And the nice thing is that this is a stock that does, or pardon me, this is a managed strategy that use stocks that pay increased dividends. So it's kind of a dividend-focused equity strategy. And the nice thing is that, you can see their recent recognitions. They were the manager of the decade for PSN and Forma, the #1 large cap value manager, and the #5 US equity manager. And when you have that kind of recognition with 29 years of portfolio management, that's a nice, credible partner for you to associate with as you're building your book of business. And they offer a lot of good sales resources. They have their pitch books to kind of help you in the sales process. They have various portfolio managers and even investor relations staff on hand for you to get to know, and really helps build that dynamic relationship. But we have some advisors that simply like this one because they might have clients who can look at their statement and understand what they're invested in. Whereas if they might have a statement of 10 ETFs, a lot of people might not understand what an ETF is, and that's not necessarily bad or good. It's just a matter of fact is they just know that an ETF might have an underlying basket of assets, but it's just an ETF ticker, whereas Brookmont is actually going to invest in a lot of these staples that you're seeing here. At the time I took the screenshot, companies like McDonald's, Home Depot, Chevron, JP Morgan, Procter & Gamble, those are names your clients are familiar with, and they can look at their statement and say, okay, well, now I know this is kind of the general idea of what I'm getting invested into on my equity side. So we have some advisors that maybe use Brookmont for their equity portion, and then maybe use a First Trust fixed income model for the fixed income portion. And that's how they might blend their own portfolio and put their own twist on kind of their asset management. So that's just one way you can do it. And then the last manager I'm going to spotlight before I open the forum for some questions is one of our groups called Black Creek, and they are institutional core real estate provider. And what I think a lot of people don't realize is that US market cap in trillions, commercial real estate is actually the third largest asset class behind equities and treasuries. I would bet many people listening didn't know that. The nice thing for you, knowing this information, is that your clients likely have no exposure to it. They've probably never been presented with an option to get into it. And at the same time, if you're looking at the big institutions or endowments, different endowment funds for maybe universities or pension funds for large companies, on average, they probably have about 10% allocated to core real estate, whereas your average Joe and Sally Smith don't have exposure to it. So you as an advisor can bring something like this to the table. It gives you kind of a marketing point to pique their interest, saying, this is the third largest US market cap industry, and you don't have any exposure to it, or your current advisors never presented anything like that in front of you. I wonder why that is. And it kind of gives you a leverage point to kind of start the conversation. And the last bullet point there is over time, it does, it is statistically proven that with a typical 60-40 portfolio, if you just give about 10% exposure to core real estate, it'll, over time, increase performance and lower volatility on average. And all that's going to do is give you an asset in the client portfolio that has low market correlation. So when the market was dipping back in February and March, our advisors who had some exposure to core real estate were happy, because clients might call in with just understandable panic or just curiosity, and they might know that while their equities are going down, their fixed incomes may be staying steady, they still have that 10 or 20% to real estate that's uncorrelated. So that's always like the steadfast rock at the portfolio that is going to really do its own thing no matter what the markets are doing. So a lot of our advisors like having access to talk about something like this. So I know I went through all three of these quickly. These are just 3 of the 9 managers we have on our platform. So if you're curious to learn about more, I'm happy to talk through those. We actually do have webinars with each manager available on the IAMS Wealth Management YouTube channel as well. So if you'd like that link, I can pass it along to you too. But really, it does span the spectrum. As you can see, we have ETF managers like First Trust. They're more of a strategic manager. We do have 2 other managers that are more ETF based but tactical. So they're going to try to bounce in and out of the market using repeatable market data that they can kind of use to their leverage over time. And then like for this one, Black Creek, we have alternatives managers. So we can really help any client get their needs met in I think a very simple way for someone who might be just getting their 65 and needing a nice, easy track to run on as they slowly get more familiar with the investment management business. So I guess that will be my final point I'll make on that. I know we're about 45 minutes in, so I'll end with just some questions here. So give me one moment. I know we've gotten some questions actually as I've gone on, so I'll try to read through some of these best I can. And if you have anything that you want to know that I haven't answered, feel free to type these in as well. Okay, so it looks like the first question is regarding kind of our study program, which I'm glad. I mean, that's where everything starts. So I'll kind of take a step back and just kind of say that to join IAMS Wealth Management, the easiest way is a Series 65. So if you have that already, and maybe you're with a different firm, or you're not with a firm, but you've been with one in the last 2 years, we can actually get you registered. We could start that process tomorrow or even this afternoon if we wanted to. There are a couple other ways to get registered with an RIA. In certain cases, if you have your Series 7 and Series 66, and you've been with a broker-dealer and maybe been doing advisory functions in the past, we can usually kind of transpose that and get you registered based off of those 2 licenses. And then lastly, I think a lot of people don't realize that if you have certain designations, that actually covers the testing requirement to get registered as an investment advisor instead of a Series 65. So if you're listening and have a CFP or a CHFC or a few others, so if you have any designations and you want to run those by us, feel free to do so, because that we could get you registered, like I said, today, tomorrow. We could start that process, and all we'd need to do so is just our paperwork and just a copy of that certificate. So that's the high level look of what you need. But let's say you don't have any of those and you're looking to start our Series 65 program. There's a couple of different ways to do it. We have an institutional partnership with Kaplan, which allows us to get the study materials at a little bit of a discount for you, and those are sent right to your door, and you can start the program. That usually entails, a textbook like you would have in school, online capabilities. You can kind of quiz yourself, and then there even is a package available that does have live instruction capabilities too. So if you're a learner who does better in-person settings, there is that option available to you. I will say a majority of people that pass it just do the basic package of just the book and the study questions online. What I stress to anyone trying to do it is that it does take anywhere between 60 to 80 hours of studying to kind of master the material. And that's just because it technically is a law exam. So while majority of you have probably been in the business a while, that'll help you out massively with about half of the material. About the first half of the material is dealing with regulations and different things that have happened in the securities industry over the last 50 to 70 years. And that's what they're going to kind of quiz you on too. So to pass the test, you need to get a 72%. Last I heard, it's about 130 questions. So what I stress to everyone is don't feel like you need to get an A+. It doesn't matter if you get 125 questions right or 73 questions right. Either way, you're going to have your Series 65. So we talk people through the whole study process, help you get your appointment set. And if you're curious to get that started, you can reach out to us. To start our program, it's just $400 to IAMS Wealth Management, and what that does is get you that basic study package, and it actually covers your testing fee as well, which is $165 last time I checked. And we kind of bundle that together to hopefully make it simpler for you. But with that said, we have a lot of advisors too that just go out there, maybe acquire their own study material or resources from Kaplan or a different entity, and just kind of study on their own time, take the test on their own time, and then reach out to us once they have that passed. And that's just because the Series 65 doesn't require any sort of sponsor. So I know for those of you out there who have maybe done broker-dealer business before, usually you need a firm to sponsor you for an exam. The Series 65, anyone off the street can take it. So that's something we can help you with, or we don't have to help you with. Whatever makes your life easier, we want to be that partner for you. So I know it seems like a few people are already typing in, they kind of want to get rolling. And to that point, I think it's a great time to be doing that. Even if your business is kind of staying afloat right now, I think we all are finding ourselves a little bit more free time, maybe we're used to. For me, I guess over the summer, that's meant a lot more golf. But living in Nebraska, I know those days are quickly numbered, as I'm sure a lot of people listening, as winter months start coming in. It's not a bad time to kind of get started on that. Use your free time to pass a test, and then once you have it for life until you resign from a firm. So it's not something that you have to keep doing continuing education on, anything like that. Once you have it and you're practicing, your affiliation with IAMS Wealth Management, your attendance at our trainings and our compliance meetings, that satisfies your ongoing requirements. So it's a small price to pay of, the dollar investment, the time investment to do something that could help your business for 10 plus years and really add value well beyond just the simple recurring revenue you're getting. So that's my pitch. One promise I'll make to you is that while I think it's probably a frustrating thing to do in the short term, it will benefit you long term. And if you'd like to speak with anyone who's already, maybe walked in the footsteps ahead of you on how it's helped them, I'm happy to get you in contact with any of our advisors. And then looks like lastly, someone made the point that they just wanted to know kind of what the testing process looks like. That you can take it, like I said, anyone off the street can take it. You just sign up. You have to go to a testing center. It's not like you can take it on your laptop and pass it. You have to go to a licensed testing center. Typically, they're Prometric. I don't know if you're familiar with those, but we can talk through that on more of an individual basis. But let's say you pass it, you go in and you pass it. You just let us know. We have registration paperwork. We have, I guess the registration paperwork entails our forms as a firm, forms we have to file with the SEC and FINRA to get you registered with the state. And then we just need your certificate of passing, and that's all we need to get you started. If it happens that you don't pass your first time, which I will say is probably about a 50-50 pass rate the first time, you can take the test again, no questions asked. You just have to wait 30 days. So there is a little bit more time period. What we find is that for anyone who might not pass it the first time, just the experience of taking the test is wonderful, just because you kind of get a general sense of the sections you need to work on. You have the experience under your belt of knowing what it's like to go into a testing center, be facing a time limit. The experience itself is priceless. So what I would encourage anyone who's along the study timeline, let's say you're 40 to 50 hours in, you're getting 70, 75% on the practice tests. There's no harm in taking the test. And even if you don't pass it the first time, there's no shame in that, because all you're doing is giving yourself just more ammunition to understand what the test needs. And like I said, if it takes you 2 times, it really doesn't matter, because you're going to have that license for life. So it looks like that answered that question for some individuals. And then some other people, it looks like hearing that there's designation options available, so that's good. Someone wants to know the fees about being associated with IAMS Wealth Management, and that's a great question. So first off, we don't have any sort of minimum production requirements for coming in, so it's not like you're going to be an advisor with us, and if you don't have $1 million under management in the first 3 months, we kind of show you the door and say thanks for trying. That's not to say we won't kind of keep an eye on things, and if you're 12 months in and don't have a client, there's obviously a disconnect because you're not getting the value out of the relationship, and that either means we're not giving you the tools you need, or giving you the training that you need, or being the partner that you need. So it's kind of a two-way street. We want to make sure we're helping you out, but at the same token, there's no sort of minimum requirements. But as far as the affiliation costs go to be with IAMS Wealth Management, it is $300 a month or $3,500 a year, whatever way you want to look at it. But that does get you all the different tools and access to the platform we talked about earlier. So you're getting your website hosted and maintained as part of that $3,500. You're getting all your marketing services, anything you need built out, from social media page to a mailer to a business card, all of that is included with the $3,500. You get your E&O insurance covered for not only your advisory business, but also your existing annuity business or life business. So that's typically a $300 to $400 to $500 cost savings right there for a lot of advisors as they kind of cancel their current one. So there's a lot of value there. Going beyond that, it covers all the business processing tools we talked about. It covers your access to our team pretty much 24/7. So think of it as a small down payment on getting an extra 3 to 4 staff members to your team if you're a 1 to 2 person entity. And then on the backside, it covers a lot of the costs for our compliance software we need to have to make sure we're monitoring and archiving all the various marketing materials and client communications and website archiving, things like that. So there's a lot behind the weeds there, but I guess the point I'm trying to get at is it does cover really everything for that ongoing fee. And then one thing I forgot to mention too is it does also include a designation, the Certified Financial Fiduciary designation, typically a $2,000 retail cost. For any advisor that joins us, we're willing to cover the cost of that, just because we think that's a good marketing leverage point and just a further way that we can prove that not only as a firm are we encouraging our advisors to go out and continue to educate themselves, but it shows you personally your commitment to your clients and your prospects, that you're trying to do all you can to make sure that you are as educated and as credible as you can be to make sure you're servicing the accounts best you can. So now hopefully that answers that question there. I think there's maybe a follow-up question to that about the fees to get registered. There's no upfront registration cost. It's not like you owe us $1,000 and then the ongoing $3,500. Everything's included with that $3,500. The only thing that does vary from advisor to advisor is just your specific state registration costs. So if you're in only maybe one state, typically that state registration cost can be anywhere between $25 to $125, but that's a one-time annual fee that is just going to be on your January statement. But then we do have other advisors that might be in 4 to 5 states if that's where they run various seminars or have different places of business, and then that cost might be a little bit higher. So that's the only cost that varies. And I guess in theory, that's the only, other cost to get you registered. So I'd say on average, anticipate that your cost is going to be around $50 a year for a state registration. But if you want to know your specific state cost, just reach out to me directly. I'm happy to get that information for you. It looks like the last question that I think might pertain to majority of the audience is in regards to kind of the client accounts, the fees, the billing, what you charge the clients, what you retain as the advisor. So at a high level, I'll kind of explain how the fee works. So at IAMS Wealth Management, we have what we call our wrapped fee program. And what a wrapped fee is simply an investment management fee that pretty much encompasses all the costs you could think of within an investment account within one fee. So what that means is the client's not paying individual transaction costs for each trade, each buy or sell, or if they move over a bunch of mutual funds and need to get into a model and that manager trades twice a month. The cost of those transactions are bundled within the fee itself. And it also includes the fee for the asset manager. We're going through Brookmont, First Trust, Black Creek earlier. Obviously, those managers have a cost too because they're not, doing business out of the kindness of their hearts. They have to generate revenue too, and that's included in our wrap fee. So the client's not paying more or less depending on the manager that they're using. And that wrap fee is 90 basis points. So that covers, like I said, TD Ameritrade's fee. That covers the asset manager's fee, and it also covers our fee as a firm. To kind of do what we need to do to trade the accounts, build the accounts, and make sure they're compliantly done. And that keeps our staff paid and keeps our lights on as a firm. And then you as an advisor can charge up to 1% on top of that. Majority of our advisors do. Some maybe discount their fee on occasion or just want to do a discounted fee to be more competitive and don't mind taking a little less revenue. No skin off our back. We want to make sure we're helping you run the business how you want to. But with that said, majority of IAMS Wealth Management clients out there are paying about a 1.9% wrap fee. And again, that encompasses all the transaction costs, all the management costs within that one fee. And that's pulled annually in monthly arrears. So they're saying just one consistent fee every month. And then for you, the advisor, you're getting a consistent payout every month. So it's not like it's an annual fee that's billed and the client's wondering, why they're getting billed specifically. It's just part of the management process. So they're going to see it on their statement. They're going to understand kind of what that fee goes to, and it kind of makes your life easier as an advisor. And at 1.9, for where we stand in the services we provide, that's actually pretty competitive. We have within our network of, I would say, competitors, charging anywhere between 2 and 2.25%. And granted, the writing's on the wall for various costs to go down in the industry. As I'm sure a lot of you are aware, various custodians have gone to commission-free trading for certain assets. Kind of the writing's on the wall that there's going to be maybe a little bit of fee compression there too. We're certainly aware of that, so I wouldn't be shocked if within the next 6 months our wrap fee is lower than 90 basis points, but for now it is. But with that said, a lot of our advisors come across clients who maybe they're looking at a statement and they're saying, well, my advisor's only charging me 1% or 1.25%. Why do you want to charge me 1.9? Well, it's really at the end of the day just a different way to skin the cat, so to speak, where that advisor who's charging a 1%, 1.25% fee might also be placing the client in mutual funds that have their own management fees themselves. So it's not uncommon for an average mutual fund to have an expense ratio of 75 basis points to 1% to 1.5%, depending on the level of management and the level of detail they're taking. So what the client might not realize is that they're already paying close to 2%, 2.5%, but it's just not plainly said on the surface. So the way we coach our advisors is to actually have that conversation in almost a marketing setting, just saying, well, how does your advisor then, we understand you're paying 1.25%, but did your advisor explain the expense ratios to you in these 4 mutual funds? And oftentimes they're like, well, no, what are those funds or expenses? And through our proposal software, we're able to see that, well, Sally client, this mutual fund has 75% expense ratio or 75 basis point, pardon me. This one is 1.25. So if you do some quick math and average everything out, you're actually paying 2% already for fees you didn't even realize were there. So different ways you can kind of create that bond with a client just by being more transparent, more straightforward in a way that I think is going to get them to trust you more. And that's why our advisors have had success out in the field, and that's why in a little under 4 years we've been able to gain about 80 million in new assets under management, with majority of our advisors out there charging the full 1.9%. So that's kind of my 2 cents on that. I'm looking here. I think that really encapsulates all of our generic questions. I see a few more maybe, but for the sake of time, I'll follow up one-on-one on those. I know we kind of went long on time, but I appreciate a lot of you sticking with me for this entirety of the time. I'm more than happy to always do that, especially when there seems to be good interest. So hopefully it's time well spent for you. I know it's time well spent for me. So we understand that schedules are busy, especially during this time, juggling business during the middle of a pandemic. But I do appreciate you spending about an hour of your time with me to hear about IAMS Wealth Management. I'm encouraged to hear how it seems like a lot of you are already kind of brainstorming ways that might be able to help you as the year winds down, as you maybe already start thinking of how you want to plan 2021 and how your business wants to grow. So that's what gets me excited. I know that's what gets our team excited. So closing out here, we're excited to work with you if that's something you decide is a good idea for your business. So if you want to follow up with any information on our platform, if you want more info on the managers, our study process, or even just getting started and you want to know what the paperwork entails, that's our phone number down at the bottom of the screen, 888-255-7670. If you want to reach me, I'm going to be at extension 1, but anyone on our team can help you with that. Otherwise, if you want to email me directly, my email is just my first name, Charles, at IAMSWM.com. And that's just IAMS WM, short for wealth management, .com. So looking forward to speaking with many of you down the road. Thank you for your time today, and have a great rest of your day, everybody. Thanks again.